Ewen Stewart, you are the author of Much Cost, Little Benefit, which is the white paper that's recently been published by the Scottish Research Society. We'll go into the detail of the paper in just a moment or two, but would you be so kind just to give me a brief overview as to the starting point?
Yes, critical debate coming up 18th of September. But I find it extraordinary that there was not a comprehensive examination of what an independent Scotland would look like from an economic and financial perspective. So what we sought to do was just to stand back, take an independent assessment of the drivers of the Scottish economy and how Scotland would fare as a separated independent country.
And what are the sources of data for this document?
Well, we went to primary sources. Most of the data actually comes from official Scottish Government data that's freely available online. Also the Office of National Statistics, the UK Statistical Agency, Eurostat and other primary sources. And
because of the nature of the beast, because we don't really know what's going to happen post the 18th, there's been a number of assumptions made in the document. Yeah. Well, should Scotland vote to separate, there would be a debate on a number of issues, how oil is split, the national debt, currency, etc. We have tried to look at this in a fairly favourable light from a Scottish perspective. We have assumed that Scotland takes its per population share of national debt, which I think most people assume would be the case. We have looked at oil in two ways. We've looked at a population share of oil, and we've looked at the most favourable scenario, which would be a geographic share of oil. We've assumed that Scotland does join the European Union, and that is itself greatly open to debate, albeit not on the terms that the British government currently enjoys. So I think our assumptions are fair and reasonable, and there's a sliding scale, if you like, in terms of oil and national debt. The big one is the economy, of course, because we do not have a clear picture of what the currency is going to be. We know what the Yes campaigners would like, but we also know what Westminster is saying. Yeah. There are four options on the table, I believe. Yeah. Just talk us through those. Well, the best option for Scotland is to keep sterling. Let's be absolutely clear about that. And that option would be a full partner as a member of the Court of the Bank of England with lender of last resort. So if the banking sector had a crisis again, it would be stood behind by the British balance sheet, which is 11 times the size of the Scottish balance sheet. However, if Scotland votes to separate, understandably, the rest of the United Kingdom would be reluctant and have said that Scotland could not share sterling. You can't have your cake and eat it, if you like. Why do you think that is? Is that a posturing stance from Westminster, do you think? No, I don't think it is. I think all the major political parties have been absolutely clear. And you can see it from their perspective. Why, if Scotland votes to leave, why should Scotland have an influence on interest rate policy and monetary policy and have their banks potentially bailed out? You know, they've chosen to leave, that's fine, that's their sovereign right. But then, quite clearly, the political parties in London become interested in the rest of the United Kingdom. And I can't see that their electorates would buy anything else, to be frank. So we talked about the preference being the sterling. The other three options? Well, Scotland can borrow sterling, and that is seductively appealing. 70% of Scottish trade is with England, 4.5 times more than any other area, including the entire European Union. So it makes enormous sense to have a stable currency relationship with the rest of the United Kingdom. But what I would say is if Scotland chooses to borrow sterling, it isn't real sovereignty because they're going to have to mirror Bank of England and UK Treasury policy. The fiscal deficits, the amount of money the government can borrow, are going to have to be very similar to the scale of deficit in London. And as the Scottish economy is highly cyclical, dependent on oil and particularly banking, it is a very cyclical economy and therefore prone to asymmetric shocks. So a small shock in the south of the British Isles would be magnified to Scotland. And you've seen this with many other borrowed currencies, be it the ERM crisis or what's happened in Argentina. So seductively attractive, might work for a year or two, but in the long term it simply doesn't work.
The other options that Scotland faces to join the euro, that of course the arc of prosperity that the Scottish government talked about, it hasn't quite worked out that way, and it's interesting that they have already changed tack and said instead of joining the euro they now want to join sterling. It makes no sense to join the euro for 2 or 3 primary reasons. One is the trade is with the rest of the UK, it's not with the European Union. The second is the European Union, the euro has not been a success. There is endemic levels of unemployment in the peripheral countries. Ireland is a prime example of that. But the third thing is quite interesting. If Scotland wants to join the European Union, it is very likely that joining the euro will be a primary negotiating ploy by the European Union. So it may be that Scotland has no option if it chooses to separate from the United Kingdom. There are 2 other currency options. One is that you could form your own currency, let's call it the Scots. And you could do that in 2 ways. One is you could try and fix it to sterling. That's quite clunky because every time you cross the border you're going to have to exchange currency, but also very similar to borrowing sterling, it's prone to blowing up. Perhaps the best option if they can't take sterling would be to have a floating currency, very suboptimal because of the trading relationships with England. But if Scotland chose to do that, there would need to be tremendous fiscal discipline. And by fiscal discipline, I mean control of public spending.
And can we just nail down that for people that may have not heard that phrase that often about the floating currency? Can you just explain what that is?
Well, sterling is a floating currency, the dollar is a floating currency, the Swiss franc is a floating currency. What a floating currency is simply a currency used within a national boundary, which is allowed to the markets decide the value of that currency on a minute-by-minute basis. So actually, sterling has done fairly well over the last couple of years. It's appreciated against the dollar. It's, after a difficult period, appreciated against the euro. Scotland, if it chose to float, would be at the behest of global capital markets, as indeed sterling is at the moment. But as a new currency and an unproven currency, there would be, I think, an interest rate penalty. And I also think that Scotland would have to show tremendous fiscal discipline. And fiscal discipline is simply controlling public expenditure. And I think that the inherited position that Scotland would face would be a pretty large deficit. And that would be a primary task if Scotland wanted to have a successful currency.
I just want to touch on banking, which comes in the report while we're talking about currency. What, in your view, if Scotland had been independent back in 2008, when everything, as far as the banks went pear-shaped, how would we have coped?
Without exaggeration, Scotland would have been bankrupt. That might sound a dramatic thing to say, but the banking sector, largely Royal Bank of Scotland and HBOS, their banking assets, and assets actually means debts, outstanding loans, 12 times the gross domestic product of the country. What does that mean? Well, Iceland, which did go bankrupt, was about 8 times, and Ireland, which has had tremendous difficulty with property prices falling 40%, very high unemployment, big cuts to the public sector, its banking sector was 6 times the size of its economy. So there is absolutely no way that the Scottish economy and the Scottish balance sheet, which is 1/11th the size of the UK balance sheet, could have coped with the events of 2008.
And the point that you make in the white paper is that bad debt, as it were, is better spread across 60 million, a population of 60 million, as opposed to 5.5. Is that right?
I think that's absolutely correct. The Bank of England pumped in about £1.5 trillion to protect the UK banking system. Now, not all of that was to Scotland, but I think it'd be fair to assume at least 40, possibly higher percentage of that would have been to support the Scottish banks. And there is absolutely no way that an independent Scotland could have funded that sort of money. Global markets wouldn't have allowed it. Iceland went bust on a smaller amount. The same would have happened to Scotland.
And while we're talking about money, let's talk about the figures that are in the white paper that say that separation may cost each household in Scotland between £3,400 and £5,500 a year. How did you come to those figures?
I mean, we've looked at it from two scenarios. The lower number assumes that Scotland gets the best possible case scenario in terms of the oil split. The higher number assumes it gets a population oil split. But what we've assumed, if you think of it very simply, Scotland raises about 48 billion in tax a year. Last year it spent 65 billion. That is a gap of some 17 billion pounds. Now, if Scotland wanted to join the European Union, it would be obliged under the Maastricht criteria to cut its fiscal deficit to 3% of GDP. And it wouldn't have to do it in 1 year, admittedly, but certainly over 3 to 5 years, it would have to normalise its balance sheet. And that contraction would indeed mean a cut in spending of between 8 and 13 billion pounds, dependent on the oil settlement, and that is £3,500 to £5,500 a head. But the cost is actually higher than that, because an independent Scotland would not be able to enjoy the low interest rates that Scotland currently enjoys by being part of the United Kingdom. Short-term rates 0.5%, 10-year interest rates 2.8% or thereabouts. I've argued in this note, and I know other economists have argued similarly, that there'd be an interest rate premium of between 0.5% and 1%. That might not sound very much, but on a £100,000 mortgage, that's £500 to £1,000 a year. And there's a double hit on that, though, because not only is it an extra £500 to £1,000 this year, next year, and every year, and more if there isn't financial discipline, but it impacts the value of property negatively.
Ewan, one thing I'd like to pick up on at this point is, do you think there's enough money in the pot for Scotland to be independent? It's a very costly country to run. With the ambitions of the Yes campaign, is there enough money to start an independent Scotland?
Can Scotland be independent to a fashion? Of course it can. You know, if Cyprus can do that, Scotland can do that. But the question is, what sort of Scotland will it be? And the ambitions written in the white paper, the Scottish Government's white paper, are really unaffordable. They make ludicrously positive assumptions on the price of oil, which is completely beyond Alex Salmond's control. They make assumptions on the geographic split of oil, the most favourable scenario conceivable, and they're now talking about repudiating the debt, and which I think would be a very, very dangerous and very serious thing for a new country to do. Even under those very positive assumptions that we have just outlined, the harsh reality is, with that oil settlement, Scotland would have 53 billion in tax receipts, assuming none of the financial services sector and other sectors left the country. Let's assume that was the case. And they're spending 65 billion. And that 65 billion is rising, and it's rising because of an ageing population, and of the cost of healthcare, education, welfare, all those things. It's very difficult to cut. And I think within pretty short measure, Scotland would be forced to either raise taxes very substantially or cut spending, or probably both.
Let's talk about oil for just a second, because it seems to be, it is classed sometimes as the jewel in the crown, but the reality is are quite different according to the white paper.
Listen, do you want to have oil? It's a good thing to have. Of course it is. It's a good thing to have. But let's be frank. To get the oil out of the North Sea, it's hostile territory. It's deep water. It costs in the high £20 a barrel to get out, against $2 or $3 in Saudi Arabia. So it's an expensive field. Point two, which I think is quite important, is that oil is declining. It's not just Walbrook economics saying that. It is almost every commentator is of the view that the majority of the reserves have been taken, the easiest to get reserves have gone, and production has fallen from about 4 million barrels a day in 2000 to about 1.5 million barrels a day now. Very few people believe, and I'm certainly, my own understanding is that oil production will continue to gently fall from this level. So it's an expensive field, it's a good asset to have, but it's a declining asset, and it's a highly volatile asset. There is no way that Scotland can have any influence on the international oil price for obvious reasons.
Ewan, on page 21 of the white paper, you talk about public spending and taxation. And to be honest, it makes for some eye-watering reading in parts. Just give me a brief overview of your thoughts with regard to public spending and taxation.
Well, public spending is very high in Scotland relative to the size of the economy. It may not be commonly known, but over 50% of the economy is spent by the public sector. That is an eye-wateringly high figure, and it's a full 5 percentage points higher than the United Kingdom average as a whole. So the question is, how large should the state be? That's a question for the population as a whole, but I think people really need to be aware that the size of the state is already one of the largest in the world, actually. The second issue is that public spending is about just over £1,200 a head higher in Scotland than the rest of the United Kingdom. So Scotland's already getting quite a good deal in terms of spending. Scotland is an averagely rich region of the United Kingdom, yet spending is 10% higher. I think that's a really interesting point that those in favour of separation should consider. How can that possibly continue? I think they also need to consider, with a fairly stable and ageing population, how spending is controlled, because as spending already is growing in a way that I think is unsustainable in the long term without quite substantial tax rises. And we discussed it earlier, but the harsh reality is Scotland raises between 48 and 53 billion in tax, depending on how favourable an oil settlement Scotland gets. It's spending 65 billion. As a fairly small country, 1% of the European population, that deficit is much harder to manage than it is part of a much bigger entity. The UK is the sixth largest economy on earth. And as we've discussed earlier, Scotland's a very cyclical economy, and that will create, I think, a significant difficulty in managing spending. So I think the promises that have been made by the Yes camp are simply not realisable, and indeed I think there'll be quite substantial spending cuts in the medium term.
And what then about the subsequent pressures on private business under those circumstances?
Well, it's ultimately public spending comes from private enterprise and business, and Scotland does have some very good private sector businesses, but unfortunately, with the state being over 50% of the economy, they are quite small, and as they are also cyclical, largely cyclical, dominated by oil and financial services. So I think that there'll be a very heavy burden put on business and a very heavy burden put on personal taxation if spending is to be maintained. And frankly, I don't think they can do that, because Scotland, if it operated a radically higher tax policy, would see corporate and job migration.
And we've heard numerous reports in the press about some financial institutions thinking of relocating down south should independence come to fruition. That is a frightening prospect, with you saying the majority of our monetary interests are within the public sector and within the financial institutions. Why are they so nervous? Just in plain speak, why would a financial institution head back over the border?
The financial sector is probably the sector that's most at risk from Scottish independence, and I think it's for two primary reasons. One is Scotland has two very large banks, and I do not believe that the Scottish balance sheet could cope with the size of their outstanding liabilities. 12 times GDP, much greater than Ireland and Iceland when they hit the buffers just 5 or 6 years ago. An independent Scotland would not have the lender of last resort of the Bank of England, and I think that unfortunately the Royal Bank and HBOS would have a very tough decision to make as to whether to relocate to London to have that lender of last resort, and it's a real issue, given that 5 years ago the Treasury saved those banks from bankruptcy, or they'd have to shrink their balance sheets precipitously, which would be very, very bad for growth. The second reason is that many of the life companies and other financial services companies, fund management groups, etc., 90% of their customers are in England. And I do not think that the 90% of customers would be keen to take a currency risk or a risk of not being regulated by the UK authorities. So I think that's a sector that would almost certainly migrate.
Ewan, one area of the white paper we've not discussed yet is that about defence and diplomacy, what's classed as obviously as hard power and soft power. What in your view would happen to an independent Scotland as far as the military is concerned, and the subsequent costs of that?
Well, although there have been defence cuts in the last 10 or 20 years in terms of the United Kingdom's forces, there are only two significant military powers in Europe, and they are the UK and France. And the UK still possesses a number of strategically very vital assets, particularly in terms of security services, special forces, and a number of overseas bases. I think we shouldn't underestimate the diplomatic network as well. The UK has embassies in almost every country in the world, and as a member of the United Nations Security Council is one of 5 permanent powers. So the UK influence in terms of hard and soft power is highly significant. The Scottish Government have said there would be a Scottish Defence Force, and I'm sure there would be, but it isn't credible to believe it would be anything more than a very tokenistic peacekeeping force. They might look very nice in their Glengarrys and their kilts, but I think they would have little more than bayonets.
While we've been touring Scotland, getting the views of people, we were in the Borders a couple of weeks ago, and somebody made a very good point that we hadn't necessarily thought of, and it talks about diplomacy again and about the UK having diplomats and embassies in every country. Somebody goes abroad from Scotland under an independent Scotland, gets into trouble abroad for whatever reason. What happens? Well,
you can have embassy sharing agreements, but my concern really is how does Scotland from scratch set up a network? Hugely expensive, buying the real estate for starters. Where do you get the people with the skill set to do that? You just cannot magic thousands of top diplomats overnight. And I think your point is well made. If someone does lose their wallet or is attacked or something like that, they require assistance. And I'm not sure that Scotland in any short order could provide anything like the degree of assistance that's on offer at the moment.
And how vulnerable would the country be to terrorism?
Well, I think that's a very interesting question. I mean, terrorism's popped up in places you wouldn't have expected, in Madrid, in Bali, and in, dare I say, even Glasgow Airport. So I think the country is quite vulnerable, actually. The world has shifted since the certainties of the Cold War. We've moved to a very fluid and I think more dangerous and volatile situation, and Scotland simply cannot match the UK's security assets, so I think it would be a more dangerous place.
And in terms of military hardware, would we keep any of that? Would that just be, for instance, you know, if there is a yes vote on the 18th, are the RAF moving down south? Are we left defenceless?
Well, I think the split of the military assets would be open to negotiation, but it is highly unlikely that an independent Scotland could afford sophisticated fighter jets or warships. So I think the model probably would be akin to Southern Ireland, actually, which does have a standing army, but it's very lightly armed. So it becomes a peacekeeping force and maybe a border control force, but little more than that. And that's a very changed environment for Scotland, which has played a central role in global affairs, really, for the last 200 or 300 years.
There are lots of details in the 64-page document that you've written, Ewan, and it is available online. It's also available in terms of hard copies, and we've also got a shorter version which really gives us the headlines, some of the facts that we've touched on today. But let's just recap on some of those. So we've talked about currency, we've talked about oil and gas and defence, culture. The last question in the document is, does separation entail independence?
Well, it's an interesting question. Perhaps at a psychological level it does, but I don't think it does in a meaningful level, because we started off just talking about currency, and Scotland unless it forms its own floating currency, either has to mirror British monetary policy or European monetary policy, and is very vulnerable to shocks. So that isn't a meaningful sovereignty. It's sovereignty for 10 minutes until the Bank of England put interest rates up and Scotland has to follow suit. We have talked about public spending and how Scotland actually already has probably more than its fair share of public spending, over half the entire state. And I think Scotland will really struggle to maintain that, even if the desire of the people is to have a social democracy. I don't think it becomes affordable. In terms of oil, yes, they may or may not get sovereignty over the oil, but they cannot influence the price of, independent Scotland cannot influence the price of oil. So the revenues coming in are highly, highly volatile. And in terms of diplomacy and culture, I don't think an independent Scotland is in a position to project its cultural values, because I think they will be much weaker with a smaller number of embassies, more poorly staffed, a smaller military. And actually, in terms of the media, if you think about it, Scotland plays a disproportionately large part in the UK media, be it the BBC or Sky or whatever it might happen to be. In time, those Scottish voices would disappear, just as Southern Irish voices are very seldom heard on the BBC, outside maybe Terry Wogan, who I think has been retired. So Scotland will become a smaller place. And the irony of this is those who say they are patriots and want a yes vote are diminishing Scotland. They're diminishing Scotland economically, they're diminishing Scotland culturally, and they're diminishing Scotland socially. The real patriotic response is to vote no to this. And I've looked at this from a dispassionate perspective. My consultancy is an independent consultancy. And the economic case is overwhelmingly, in my view, the risks are overwhelmingly against independence. But this isn't real independence that Scotland will get. It might be some sort of psychological feel-good factor, but there'll be a very heavy economic and social and cultural price to be felt.